what is an index or an index fund? You may have heard of terms like the S&P 500, the TSX, the VIX, or the Nasdaq, and have had to look up what they mean. If that's the case, this video is for you. If you know what those are already, be sure to share this with your friends so they know just how much smarter you are than them. Alright, all jokes aside, this is important because indexing may be the simplest way for anyone to invest. If you want to learn about the key indices, pay attention. We'll talk about the S&P, the Dow, the Nasdaq, and we'll learn how indices can possibly help you build wealth by understanding how you can invest in them. This is episode 19 of 30 of our 2021 Money School. We'll take you through the basics of personal finance and investing. We'll look at real life money lessons we all really wish we picked up from school. So check out the description to see the whole playlist. If you're serious about taking control of your money, consider subscribing and be sure to hit the bell so you never miss any of our lessons. So what really is an index? If you take the word average and you put your pinkies up when you say it, that's an index. Alright, that's enough of my jokes. But seriously, an index is simply an average of a given data set. The weights may change, but it's still the same calculation. It works like an average. Look back to grade school. At least during my time, not everyone got ribbons. We were all told the class average and we were ranked, and they gave the top 10 marks. So if you took everyone's final marks in your class and they added it together and divided by your class roster, let's say there's 30 of you, that's the divisor, that's the index for your class marks. Of course, there's smarty pants who bring up the average, and there are those who slack off and try to copy my homework. Those guys would tilt the index down. The average alone doesn't help the instructor or individual students. However, it can be used as a benchmark to see whether the class is improving over time or they're getting worse. It can also be used to compare how one section is faring against another. Again, think benchmarking. For the individual student, they can use it as a gauge and see how they stack up against the class. See, an index is simply a mathematical calculation that aims to show how a pool of assets is performing expressed in a simple number. How are stock market indexes or indices calculated? Well, let's take this back to the market. The S&P 500, also called the S&P, is an index that tracks, you guessed it, 500 plus American companies. It's usually the top 500. I'll talk about it first because it's the most commonly cited and reviewed index there is. Even though there are thousands of companies in the US economy, the S&P accounts for majority of the value in all the publicly traded companies, making it a great proxy for the US economy. S&P 500 is a float adjusted market capitalization weighted index. Market capitalization is simply the stock price of a company multiplied by the total shares outstanding. Having it float adjusted simply means all the shares that are not publicly available for purchase or trade in the open market is removed from the calculation. So if you're looking at Amazon, for example, the float adjustments will remove Jeff Bezos' shares from the float count. Having an index that's market cap weighted means that companies with a bigger market capitalization would have a bigger impact on the index. Standard & Poor's, the data company that started the S&P in the 1950s, has a proprietary divisor which they have used to calculate the index average. This number is read as points. At the time of writing, the S&P 500 closed at 4,432 and 85 points. It was down 40.76 points that day. Ooh no, it's red! I just want to quickly talk to you guys about how the point quotes get confusing when you hear them on the radio or news headlines. Like, ooh, the S&P is down 40.76 points today. If you didn't know what that is, if you didn't realize that S&P was sitting at 4,400, that could sound like a huge number, right? Unlike the percentage change, which is 0.91%, you're always going to hear the bigger number in the news, especially with the Dow, because it's an even higher number. Today it's down 165 points. Oh my God. Well, that's a much bigger number than 0.48%. So even though it was a higher point number, it was actually down less than the S&P as a percentage. The way you see financial information through media is framed to stoke fear. Here's a bonus tip. Indices can actually move 1 or 2% up or down any given day while the market is open. So a 0.5% increase or decrease is really no reason for concern. It's nothing to write home about. Look at this recent article from the Financial Samurai. It shows an awesome visual of that. Now, I brought up the Dow, or the Dow Jones Industrial Average, now because unlike the S&P 500, it's a price-weighted index. It takes the price of the 30 largest American companies, adds it together, and divides it by their divisor. Market cap weighted indices like the S&P have bigger sway towards bigger companies as far as valuation. On a price-weighted index, the share price will determine how much weight a specific company has on a particular index. There are also equal weighted indices where, regardless of the size or price, all constituents impact the index the same way. I share that simply so you know that there are different ways to calculate the index that you're looking at. The most common is the market cap and the price weighted calculation. Now let's talk about the most common indices, probably the most important ones that you would likely encounter. There's thousands of them, but this is probably the ones that you're gonna actually bump into. Now, we've already talked about the S&P 500 and the Dow, so we don't need to discuss it further. I just want you to remember that if you hear somebody say that the market is up or down any given day, they're probably referring to the S&P, even if it's a Canadian investor that you're talking to. That's how prominent the S&P is, so be sure to clarify. Next, there's the Wilshire 5000, also referred to as the total US. See, even though the S&P 500 is the most commonly tracked index, there are other companies beyond the 500 that don't qualify, either because they're too small or they're not liquid enough or not traded frequently enough. The Wilshire 5000 takes a broader sample size of the US economy. Even though it says 5,000, there are actually about 3,800 constituents in this index. Next, there's the Nasdaq Composite. It's an index for all companies traded on the Nasdaq exchange, and there's going to be a heavy tilt towards tech in the Nasdaq Composite. About half of its constituents are in tech. There's also a subsection for that known as the Nasdaq 100. Next, there's the Russell 2000. This is the last US index I'll talk about right now. This measures the smallest publicly traded equities. It's a proxy for small cap companies. Let's go to Canada, eh? That's a terrible joke. There are two commonly used Canadian equity indices, the S&P TSX 60 and the S&P TSX Composite. The key difference? The Composite looks at roughly 250 constituents, while the 60, well, looks at 60. There are also different bond indices that would track different terms of bonds in our bond universe. There's short-term bond indices, medium-term or long-term bond indices. Next, let's go international. Let's look at global indices. There's really two that I look at. The MSCI World Index, which tracks 23 different developed economies, and the index claims to track about 85% of floating equity markets in each economy. It has about 1,500 constituents. Next is the MSCI World Emerging Market Index. It captures 27 different emerging economies such as China, India, Korea, Philippines is actually on this, as well as a few oil-rich and energy-rich economies such as the Saudi Arabia and then United Arab Emirates. See, every country will have its own index, so to all my international friends, check out what you own and check your own economy's index. The primary index for Japan is the Nikkei 225, and the Philippines is the PSEI. Then let's move on to the last group of indices that we'll talk about. They're not really stocks or bonds, they're actually indices for commodities and real estate. There are indices for gold. Remember, an index is nothing more than a mathematical calculation to quickly show the value of a group of different assets and securities. Index overlap. I want to address index overlap. Let's look at the MSCI World Index. It has 1,500 constituents across 23 developed countries, and that's a lot. But here's the thing, even though it says world, 2/3 of this index weight is in the US. Its top 10 constituents, all American companies. Now, when you look at the TSX Composite, it has an overlap. It probably has most or all of the TSX 60 in it. With the Wilshire 5000, you would probably find the constituents of the S&P inside it and the Russell 2000, and all three would likely have parts of the Nasdaq Composite. I bring that up because I want you to think about it this way. The Russell 2000 is designed to track small cap companies, and the S&P will track the large cap companies, while the Wilshire 5000 will track the whole market across different market capitalization sizes, big, small, large. It's an all cap, so to speak. The small cap index, though, will behave as a small cap index, while the large cap will behave like large cap companies do historically. They have performed differently. They are different asset classes and they've displayed non-correlated returns depending on economic cycles. In our video about asset classes, we talked about being intentional about the assets you hold. This is important because when you look at this and you start investing, it's very possible that you may be tempted to just look up and buy up a bunch of different indices without understanding what kind of portfolio you've created and how much correlation is actually being stacked onto each other. What I would do as I learn more of these is explore what the constituents actually are, and you'll very likely see the same usual suspects. If you're a DIY investor, remember it's not always better to have more funds. Understand that there could be some false diversification because of how much overlap one index would have to the other. If you've spent any time at all watching financial news networks, you would have heard or seen the term fear index. It's represented by the VIX. And no, I'm not talking about the rub your mom put on your arm after you broke a bone. I'm talking about the VIX. It's the Chicago Board Options Exchange Index, and it tracks options trades. Options are financial derivatives that can be used as insurance plans for your stocks. The calculation for this is quite complex because it uses implied volatility. Options can be used as a gauge of future volatility though for the S&P 500. So look at it this way. Would you agree that most people have a weird relationship with insurance? No one likes talking about it, but you hear that there's potentially a hailstorm tomorrow. You'd want to make sure you have the right hail coverage on your home in place today. That's the idea behind the VIX. All of a sudden, there's an influx of people wanting to look at insurance plans for their investments. It shows that the sentiment for the coming month is saying there's likely going to be a storm. That's why it's called the fear index. It shows people are afraid of something. So how do you buy the index? You can't. Well, at least not directly. Remember, an index is just a listing. It's a way to show information using math. And in order to participate in index-based returns, you actually have to purchase financial instruments that hold the same constituents as the index. These funds then have to own the shares of these constituents in the same weighting that the index has. Jack Bogle is crowned as the father of index investing. He founded Vanguard under the philosophy of buying the market instead of trying to beat the market. So in tomorrow's video, we'll talk about index investing further and how you can actually buy the instruments that you need, profit from it, as well as a few samples that you can look up for yourself so you understand exactly how this works. Until then, stay aware, take control. I love y'all. Bye-bye. Watch yesterday's video over here. This is the playlist right here. Don't forget to subscribe. What are you waiting for? If you haven't given me a thumbs up, you better have. Please, 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 I need it. Just kidding. See you soon.